Hey, good morning, everybody. It's Wednesday, January 14th, 2026. Happy Hump Day. I, of course, am Hammer, the founder of Originator Success, Grab and Go Social, and Rate Sensei, here to share with you what's going on in the mortgage market with mortgage rates and pricing. Hope you all are having a fantastic day. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, where I broadcast on Facebook and on YouTube. If you would like a reminder, a quick text reminder that I'm going live with the link so you don't have to miss any of the shows, go ahead and sign up for that reminder at hmmr.io/reminder. Or you can use this cool QR code over here and get signed up, and we'll send you a text alert that I'm going live. Also, while you're signing up for stuff, maybe consider signing up for our email rate lock commentary at www.ratelockadvice.com. It's absolutely free. It's an email that goes out to your inbox each and every weekday morning. You're welcome to use it any way you see fit. Also, you may want to consider signing up for our text alerts, www.ratetextalerts.com. We send out a morning and afternoon text with market conditions and wrap up. And anytime that we see risk of repricing or things are going really well and we don't want you to lock, we send you out an alert. So it's a great service, $7 a month. You don't have to spend a lot of money to protect your pipeline. Remember that. So let's go ahead and say hi to all the live folks here this morning. If you're here this morning, say good morning. If you're watching on the replay, do me a favor, give me hashtag replay in the comments. Let me know that you were here. So we'll take a look. We got Holly Johnson, good morning. Yasmin Martin, Leroy Romero, Angela Walters, Brandy Brickler, Allison Foy, Nicole Semerad, Randy Teakle, Vicky McSweeney, and Tom Dedmore. Good morning, y'all. 17 of you. Not that I don't love each and every one of the 17, but man, it was cool that other day that we had about 175 people on live. That was pretty intense. Would love to see those kinds of numbers on a more regular basis, but we'll take what we've got. So, Mallory Fotiadis, good morning. Zane, good to see you, sir. Debbie Richardson, good morning. Hope you all are doing well. Okay, well, let's dive in and we'll take it from there. So, here you go. Taking a look at mortgage-backed securities, mortgage bonds, looking at the technicals, you can see that we are seeing mortgage-backed securities up 7 basis points on the morning. Nothing amazing, but certainly not a bad day. We really didn't get much of a reaction to the headlines this morning. I'll talk more about that in a minute. We had the producer price index, wholesale inflation, and we had some retail sales. So, but overall, yesterday, basically, if we zoom in here, let me refresh. Okay. So zooming in yesterday, everything in front of this dotted line right here, you can see that it looks like things were jumping around, but it was actually a pretty calm day. We had some early movement. That was the CPI inflation data. There was a lot of trading around that data. But really, by the time it was over, if you take a look at the 5-day, it really doesn't register much of a blip. Once that initial reaction was over, things were calm. Also, even though if we look over here at the candlesticks, it looks like yesterday was a red day. It actually was not. It was actually green on the day. The reason that you're seeing that is because we had the bond rollover, and that could be confusing for some people. Bond rollover does not hurt rates. It doesn't affect rate sheet pricing. Basically, all that means is that when your lender is selling the loan into the coupon, those coupons are monthly coupons. So the one coupon is closing and they start selling into the next coupon. And there may be a small difference in the pricing between those actual monthly coupons. That difference is the bond rollover. It does not hurt pricing. It's just the way that it is. So that was yesterday. We were up about 12 basis points on the day. When we look at where that puts us as far as rate sheets, you're likely to see rate sheets today that are very similar to what we had yesterday. If we take a look here, we'll use Mortgage News Daily as a reference point. Let me ask you, if we look here, is this what you guys have seen? Is Mortgage News Daily accurately reflecting what you're seeing in rate sheets? So let me zoom in on this real quick. And I'm going to just put this at half screen for a minute. We'll move this over here. And let me pull up my pretty picture. So taking a look with me, do you guys see what we're seeing here? So remember, going into going into into Trump's Truth Social post on Thursday, rates were around 6.25. So we were at 6.21, 6.19, 6.20. I mean, really, look at this. Like, you don't get much more. Oops, that was terrible. I'll just circle like this. You don't get much more consistent than this, right? And then on Thursday, we saw that jump. And Thursday, I can't see the calendar as well over there. Thursday was the 8th. And the next day on Friday, we saw things improve. Monday's rates were probably some of the best rates because what happened in bonds here, we saw this was Thursday's improvement. That would have been on Friday's rate sheet. Friday's improvement, a lot of that came later in the day. And if you remember, so if we take a look at the 5-day, this was Thursday. Let me get rid of this rate sheet thing so you can see a little bottom here. Okay, so this was Thursday's jump, right? When that True Social post came out, and then this was Friday, and it was very, very volatile in the morning, and we saw a lot of improvement here. But by the time it really got to rate sheets, because things settled down for lenders, that was on Monday, and then I warned you that what we were seeing on Monday and Friday were probably the better rates and to lock. And this is where we're at, So we knew that jump on Friday, we talked about how I didn't think this was going to hold up that long because traders reacted to the news, but then there's nothing, right? Trump posted a tweet on Truth Social that said, I'm going to have my representatives at Fannie and Freddie buy $200 billion in mortgage-backed securities, but then what? Right? Logan Motoshami has said that Fannie and Freddie already own $70 billion and we don't have an answer on whether that means there's only $130 billion more, or is there another $200 billion that they're going to buy in? So you've got, we didn't lose all of that. We saw the spreads tighten, but taking a look here, let me go to full screen on this and we'll send it here. Let's take a look here. Look at what happened. This is where everything was, and this is where we're at now, and everything in the middle is this is all noise. This is your opportunity to lock. So, that 5-year coupon was around 99.75 is a round number. And now we're at we'll call it 100.20. So 99.70, we use even 99.70 and give it the benefit of the doubt, right? We use 75, 99.75. So that's 25 and another 20. So 45 basis points. You're looking at a whopping 45 basis points of improvement. It's 1/8 of a point in rate. That's basically what we're seeing reflected here in Mortgage News Daily. Is that what you guys are seeing as well? We went from 6.25 to a little better than 6 1/8. Is that what you're seeing? Right. So I know Ron Siegel, dude, I'll always be dating myself and talking about rate sheets. I know that we don't do rate sheets anymore, but I can't wrap my head around referencing rate sheets. Not many rate sheets anymore. Used to be interested in getting the daily facts with rate sheets. Yeah, it absolutely was. And then when you got a reprice, the faxes would light up as as new rate sheets would come in when we got reprices. So on your pricing engines, I'll still always call them rate sheets. What are you going to call them? Rate matrices? But on your rate sheets, are you seeing any? How much better are rates really? Compared to where they were? Anyone seeing 5.7 like Trump pointed? Who knows where he got that number? I have no idea where he got that number. So Harry Dennis, good morning. Mike Brown, Christy Resor, John Melnick, Rob Stewart, Carmen Amuendo, Tim Klyla, Deb Dickinson, great to Greta Cheney. Great to have all you here. Ron Siegel. Ron, you said it was National Hot Pastrami Day. I'm hungry. That I could go for that for breakfast. I had a couple eggs already, but I could go for a nice hot pastrami sandwich. Anyone else? So right now, mortgage bonds, they're currently up at the moment, 14 basis points. Take a look at this here. Isn't that exciting? That's going to give us slightly better pricing than what we saw yesterday, but not amazingly better. And I'm still in a lock bias for anything closing in the near term. It still makes sense to me. So let's see. Angela, you don't want a hot pastrami sandwich? Why not? What's wrong with you, girl? Come on, we gotta love some nice hot pastrami sandwiches in the morning. There we go. I'm gonna pull this up. So looking at some of the articles, what we've already got here, we have retail sales. This morning, we had retail sales and producer price index. Retail sales rose in November, the most since July. That's, kind of a hot economy type thing, fueled by a rebound in auto purchases and resilient holiday spending. There were definitely a lot of car specials going on at the end of the year. The estimate was for 0.5. It came in at 0.6, so it was a little bit hot. This normally is not, it wouldn't be especially great for bonds because bonds do better when the economy is a little bit weaker. But this is really not all that big of a deal or anything that's really hurting us. Nothing that we really had to worry about there. Taking a look at the producer prices. Producer prices paid to U.S. producers rise on a jump in energy costs. Wholesale inflation picked up slightly in November from a month earlier. Remember, there's core, and that's because of the energy. So if we look at the core numbers, let's see what they've got on here. No, they didn't give us a nice happy chart. So PPI report showed wholesale good prices rose 0.9%. Services are flat at 0.3%. What was the total overall core number, though? Core CPI, no, that's CPI. We wanted PPI, so no, they don't even have here. They just have the headline 0.2 after climbing 0.1 the prior month. I don't know. That's still not a big deal for inflation, so not much to worry about there. Taking a look at the Wall Street Journal, looking to see. There's an article. Trump wants to run the economy hot. There's a good chance he'll succeed. A lot of that comes down to how much control he actually can wield and influence at the Fed, as to how hot the economy will get and if he can burn it hot. Remember, they're definitely going to have to manipulate mortgage rates lower if they get the economy burning hotter. It's just the normal situation would be that rates would worsen as the economy gets hot. So, pastrami on a potato latke. That's pretty good. Hot Reuben. Yep. Randy would go for a hot Reuben. Rob Stewart could get behind that. Yeah. Tom Demore, Govey 5.5 to 5 5/8. Conventional 5 7/8 to 6. So yeah, if you can get into the fives, that's going to be the magic number. But I would still be leading with urgency. The fact that I don't see rates really improving much from here unless we get another push from Trump. That's what it would take to see rates improve. 10-year Treasury yield 4.14, 4.15. It's in a good spot today. Today's a good day to lock up some loans. We cautiously float to start the day. If we get a reversal, you definitely want to go ahead and lock those in. I don't think we're necessarily at a lot of risk for a reversal, but it could happen. I'm going to say reprice risk on the day is low, though. So, and that's it. I knew I was going to talk about something else, but I'd have to go back and look at the video because I don't remember what I was going to talk about today. I don't remember. How terrible is that? Getting old sucks. But in the meantime, I'm going to wrap it up. It is a nice, happy Wednesday. Just a heads up, tomorrow I am going with my mother-in-law to a doctor's appointment. So I should still be going live, but it might be a short live. So stay ready. Make sure you're signed up for the text alerts to let you know when I hop on. And if something happens and you don't see me, that'll be why. So just so that you know. All right, my friends. Well, I will see you next time. Take care. Make it a great day. Bye-bye.